Since the low in September, Bitcoin surged over 50%. Now we're closing in on the next major 50% level at roughly $42,000. But as we've been covering on the channel, time is running out for the market to get to this price point. However, even if we do succeed here, we may never see some prices down below ever again. So this is going to be an interesting one to have a look at in case we're still waiting for a collapse of some significant price ranges to get in on Bitcoin if and when we see a correction come. So let's get started with the historical data and the statistics. You know the deal. Thanks very much for hitting that like button. 3 out of every 10 people aren't subscribed now. So hit that button down below. It's your home of macro cycle analysis. If you stay up to date here, then you get a full understanding of what's going on instead of just seeing everything fly by your subscription feeds. All right, guys, link in the top of the video description or the pinned comment for our Black Friday sale. More on that later. That's your screen. Let's get on with it. First, we need to establish what's going on in the traditional markets because broadly speaking, we are seeing macro high lows getting formed across the board, whether we're looking at the S&P 500, whether we're looking at the NASDAQ, which is closing in on a new all-time high, just 5.5% away from that all-time high. The markets have been showing us that they have been accumulating and then pumping up. There's some distribution, corrections. The corrections are higher. And then once the market has absorbed the supply at those higher prices, it gets ready to take off again. And this isn't different across any of the markets. The thing that's slightly different is the short-term dates, the short-term ranges that we see when it comes to the S&P and Bitcoin. So we've seen Bitcoin put in a couple of lows here, September and June, whereas for the S&P 500, June was pumping up, taking out the significant resistance, and then September was also coming down, but it still had to come down a little further in October when Bitcoin was rising up. However, broadly speaking, as we've just covered, both of these markets are in uptrends. And as I've covered on previous videos as well, we first need to see the S&P 500 break into a new all-time high to trigger further upside for BTC, or at least confirm that that bull market is well and truly on, getting ready to come back to take out a Bitcoin all-time high. So we're seeing Bitcoin rise in price, but what we've seen in all previous cycles is the S&P hit a new all-time high first after having some sort of correction or pause, like it's done in history, and then Bitcoin comes through and takes out its all-time high. So I'll follow that up in future videos. So that's why I often say just subscribe so you can see the content coming through, staying on the right side of the market, regardless of what the media is telling us or analysts telling us how the markets should be collapsing. So here we are, S&P 500 is up. It's also getting pretty close to a new all-time high. It's had a very strong run out, so we just have to expect that there eventually will be some sort of at least pause like it did last week, or maybe a more significant correction. So if that significant correction comes, what we've seen at least over the last several months is that's the time when Bitcoin gets to shine and push up a little higher. So as we've been seeing the S&P 500 move to the upside, what we saw on BTC was basically a weaker move to the upside. Can things change? Of course, but let's just keep following the charts, because for BTC, the strong move started in September 11th, and it moved up to the peak roughly around the 25th, 26th of October. So for the S&P 500, we zoom in a little bit here, you can see that the S&P 500 bottomed at this point and then went on its strong run. Whereas you can see for Bitcoin, it basically did all of its move within a few days, but that was the majority of the move. And then since that point, it basically hasn't had the same sort of push to the upside like what has happened with the S&P 500. So they are trending up in a macro sense together to the upside, but as you can see from some of the shorter term stuff, it's not exactly the same. The only times that we've seen it happen exactly the same is when we see a macro world event come through, like we saw with the banking crisis. This is what happened here in March. You can see Bitcoin's bottom here, which is on the orange line. That was a significant low. Then the market powered away from that. But for the S&P 500, it did climb out of that low, and we haven't seen that price come back to break through that low, as I suggested at that time in March, just based on the analysis that we cover here and other strong reasons. which we can go through in future videos. But if you had been following, you knew that that was a extremely significant low, something that you could basically build an entire portfolio from because of how significant that March low was. And Bitcoin, same sort of deal. That was one of those prices that I talked about, saying that Bitcoin will never see that price again in this cycle. So as we can never say for guaranteed sure, for 100%, that these prices will never come back in the cycle, we can be pretty confident and put the probabilities on our side to say, look, it's very, very unlikely. Give it a few percent chance of it actually breaking that low. But for the vast majority of the time, it's very unlikely that this low was going to get broken and the market come back to collapse again. So what else do we have moving forward? Well, let's look at some time and let's look at some price to the upside for both for Bitcoin. But first, the NASDAQ, same sort of deal. Just to cover this off, you can see bear market low, recession fears, banking crisis, debt ceiling crisis, Middle East war fears. We've had other things with the US being downgraded at this time as well. But what does the market do? Well, it powers away from each of these lows, which is a very simple, strong sign of a bull market and a wall of worry forming. Here is your wall. And every time we come up, we get rejected. We get a new higher low put in on extreme looming recession type news. This is just how I'm reading the market sentiment. And so far, the market has been coming good on each of these occasions. Eventually, things flip, but I think that might be a couple of years away. Why do I say that? Well, we still have better times ahead. These cycles can last quite some time. We have looked at this before, just looking at the possibility of further upside during the Q4 period of the year. So S&P 500 index average monthly returns for the last 72 years. Pre-election years are in the dark blue here, and we're in a pre-election year. So November's had a pretty strong run, which might mean that this huge gain for December might be pushed into November, and maybe December is a little bit more flat. I don't know if we're going to get two very, very strong months for the end of the year. This seems like we're getting the strong month, the push to the upside that we've been waiting for, especially after October was a bit of a dismal flop there, but the market has pushed back. If we just look specifically at the S&P and the NASDAQ, the start of October was about these prices right here. So November is well and truly up on that so far, basically halfway through the month. So we can see that the trend potentially still up. We've had a very significant move to the upside. I think that's going to follow through for the rest of the markets leading into 2024. But of course, you can't just go up in a straight line. You get a good month, maybe get a couple of good months, and then the next couple of months just need to digest that move before having another crack at higher prices. Speaking of higher prices, the total cryptocurrency market cap, so this is just everything, it's Bitcoin, ETH, stablecoins, and altcoins, is now 7% away from the 50% level at 1.506 trillion. So for a round number, let's call it $1.5 trillion on the total cryptocurrency market cap. This was the final capitulation zone. OGs, let me know in the comment section if you remember looking at this particular chart way back in mid to late 2022, looking at how the market was potentially going to just come in and get into that final capitulation zone. It only just touched it, and now we are finding ourselves well and truly out of that zone. And in terms of a Wyckoff schematic, it does look like we are in phase D, breaking out of phase C itself and phase B and all the other trading ranges, and basically heading into possibly a late phase D or a phase E in the coming months. So why I bring this up is because the total cryptocurrency market cap is also heading towards the 50% level. And at that time, as well as BTC, we could see a correction from that point. So we've got about 7% to go for the total cryptocurrency market cap. So keep an eye on that. And of course, the majority is made up of Bitcoin and ETH in this particular market cap. Speaking of ETH, ETH is potentially on its way back down against BTC's value, which also can incline that Bitcoin may have a little more upside to go. So although Bitcoin's still going up, and maybe I've been a little bit cautious on the prices of Bitcoin here over the last few videos, it doesn't mean that I don't think Bitcoin can go up and hit the 50% as I've talked about. But I just think getting in at this stage after Bitcoin has seen lows in September, and we talked about it here on the channel as well, getting in through these periods with these higher lows forming and then the breaks, it seems like it's getting towards that end stage of the move. Of course, I could be wrong. This thing just shoots up to 50 or 60 grand, never to be seen again in the 30s. But I don't like those chances at this stage just because we haven't broken through that 50% level yet. And we've got about 11% move to the upside. So to finish up on what's going on with ETH, you can see we're in the 23rd month from the peak to the downside. Last time we saw our 23rd month, we saw a bit of a move back to the upside after testing the dollar low. So that was the USD low for that cycle. And this was the USD low for this cycle, $880 for ETH. So it's, strangely enough, almost an exact repeat of what happened last cycle for ETH. US dollar low comes in, the ETH BTC chart. So basically ETH is still losing gains to Bitcoin, even though on the daily, maybe it's up here, like you can see, by 1%. Maybe the ETH BTC is up by 1%, but over the macro, you can see that it continues to trend down. But this time was nowhere near as severe as the last cycle. And potentially we come into a low somewhere just before the halving. This is the halving here in April. Maybe we get here in roughly February, March, Q1 of 2024, at which point then you start to see a bit more of an accumulation and then the break to the other side of the market, basically a break up from that point. Do I think it's going to get to this price? Somewhere in this zone. This isn't an exact reading right here, but I think somewhere in this zone is the final resting place for ETH BTC before it starts its major accumulation and then breakout to the upside. So that's all playing hand in hand with Bitcoin and the potential move that it has to the upside that takes the market cap up to 50%, it takes Bitcoin up to 50%, and then we get to those corrective moves that potentially Bitcoin will never see again in terms of price. So this is going to be a little bit triggering for some people who are, I guess, waiting for further downside. And yeah, I get it. There's going to be some people who are still expecting a looming recession and all sorts of things that are not right in the economy and reasons why the market should collapse. And you know, you're forgetting these certain things. But if you've been here a while, and not to repeat it, otherwise the video is going to be an hour long instead of 20 minutes long. It's the same thing over and over again. We've seen higher lows on every single piece of bad news, which is why I refresh us on the traditional markets, because they are doing the same. The markets are up. Investors are liking the risk out there in the market because it is going up faster than everything else. You're getting more in the market in the last couple of weeks than you did holding your money in a bank for 5% per annum. And so they have to start putting their money somewhere else because they're not getting the same sort of returns and the market is beating them. That's the problem that they all face. So we looked at that for the total, ETH BTC, now on to Bitcoin. So we've established that there is a possibility that Bitcoin races up here to the 50% level, which gives us some calculated areas of a retracement now. So that 50%, 42,000 as we looked at before, halving's coming up in roughly 5 months. As I've talked about, I think we'll get to that 42K level before the halving, at least touch it. I'm not sure whether we're going to close multiple months above that level, but at least touch it. So it gives us a rough guide of where this market could get to, and then we can measure down some corrections from that point. Because each time in history so far, there's your halving, we had a 50% touch. If there are too many lines here, here we go again. Top to bottom, major cycle. These are very, very big moves. 50% was at $11,500. It touched it, got rejected. There was no monthly closes above 50%, even though it did run pretty hard above the 50%, but that was a huge move overall. There is your halving month. We got one touch, a rejection, and then after the halving, another test, higher low, and then a breakout just about 4 or 5 months later after that halving. Cycle before that, this is going back into 2015, 2016, just got a touch a month before the halving. Then 1, 2, 3, 4 months later, we got a breakout. So quite similar to what happened the following cycle in 2020. Got the breakout again, and then the market moves on from that point. So that gives us a rough time and price target, something really, really important. We need those time and price targets. Here we go, 5 months away. Maybe we get there this month, next month. As we covered, there is a possibility of further upside for the S&P and for the NASDAQ, and we're seeing that momentum continue on, which means there is still risk appetite in these markets, which is, of course, good for Bitcoin. So let's establish a round number here, roughly $42,000, and then look for the corrections and see whether Bitcoin will ever hit these prices again. You can see all the higher lows that have formed over the course of this cycle, and then the higher lows that formed over the course of last cycle. COVID low, cycle low, DeFi summer's over, and the market continues on from that point. So these are our pullback prices. You may have seen these before, but if they're new to you, let's just cover them quickly. The previous cycle, looking at corrections underneath the old all-time high, 40%, 40%, 35%, and 33, 34%, as you can see there. So basically anything from roughly 33 to 40-ish%. That's what happened last time. Does it have to happen exactly the same again? You know the answer to that. Of course not. And then on the way up, similar sort of prices as well, but we're just concerned with any of the prices that happened underneath the previous old all-time high, because that's the stage of the market cycle that we are currently in. We're underneath the old all-time high. As things trickle on, maybe we don't get the same sort of corrections. Maybe the cycle does have corrections, which is the same, but the prices are slightly different. That's your old, the markets don't repeat exactly, but they do rhyme. So previous cycle, when it was in the accumulation stage, 21%, similar to what's happened all the way up. We've had roughly 20 to 22% corrections in this cycle. On the breakout, 18% move to the downside. From the peak, a 34%, and then to this low point, 53%. The COVID crash, 63%, and then all these other moves underneath the old all-time high, 14, 15, 21, 12. So you can see they were pretty much teens or 20s, besides these two big moves and that one there from the top. This was a huge, huge move, so I think you'd need something very similar to that to bring on massive corrections. Now, if we don't see any of this sort of big move, if Bitcoin breaks out of, where are we at, $37,000, and then just skyrockets to the new all-time high, if that happened, sure, I think we could easily see a 50 or 60% correction. But if we keep going the way we are and we test $42,500, gets our head above that level, then the corrections that we could be looking at are, let's start from the base, roughly 11, 12%, all the way up to roughly 35 to 40%. So if we have a measuring point here at 42.5-ish to the downside, there's probably the best case for the bulls if you're already in. 12% brings you back to this current price. So that's where you can see the current price at the moment, 12%. Keep going down to roughly sort of 14, 15%, brings you back to 36K. So it's still above these other prices where we currently sit. Bring it down to about 20%. It's only at $34,000. So even from 42 down, 34,000. And I can understand that this is, we have to estimate where this market goes. And I've given you a bit of a reason why I think we will get to roughly around 42. Now, because I don't have a crystal ball, that's why we have to gauge a rough idea and come to that point using some of the previous statistics that we have seen in history. That's why I'm working off the 50%. So back to these corrections from roughly that 42,500 level to the 20%, $34,000. Take it out to about 25%. That would put us right on top of the previous highs before the market broke out. So 24, 25% might be a normal correction here, probably something to the extreme side if we only got to that 42. But if it was a systematic sort of move up to that 42K. So to the downside, this is where things start to get a little bit more worrisome for the bulls. You can see around 30% decline from that 42K level. Remember, this is from 42K, and I will measure up to the lower swing top, the monthly lower swing top in just a moment as well. 30% takes us out to 29,700, so call it around 30K. Down to, we had also 33 to 35%, so roughly speaking, 34%, 28K. So far we've seen 32, 30, 28K. Now, the worst one we saw, barring the huge boom and bust of the 53 and 63% move, 40%. 40% takes us to $25,500. That is still above these previous lows. Sure, it could run an extra 1 or 2%, take out those lows, and maybe that's what the market needs to reset. But you can start to see that the probabilities are starting to stack against that possibility of the market getting that far. Now that we've come this far, broken out of the 32K and possibly heading towards that 42K. These are all just probabilities, and we need to understand that in order to, I guess, not get screwed with our own emotions, with the FOMO to the upside and the FUD and the fear to the downside that you're going to miss out, or hope that it gets back to 25K, because the market has spent 7 months in that zone between $25,000 and $32,000 for it to break out on significant volume. It just stacks the probabilities against the possibility of it getting back to this zone. Now, I've only measured from 42. There's obviously the possibility that we never go higher than this point right here at 37 or 38K, but I want to measure from 48K as well. Now, for the mega bears out there, if they have managed to remain this long, which I highly doubt, then they're probably waiting for that 53 or 63% drop. Remember, for that to happen, there was a worldwide pandemic. If we get another one of those or something worldwide, there's your 53%, and it's still above the banking crisis low. So when I say I don't think we're ever going to see underneath the 19.5, or for round numbers, call it $20,000 low again in this cycle, that's the reason why. It's just highly unlikely with what the market has to do to get underneath that price point at this stage in the cycle. That seems like it's very unlikely. And if there was a wick there, sure. But we're talking about closing basis here, a macro closing basis, because these are macro higher lows. They're basically macro turning points. There's your 53%. Now let's go for the 63%. 63% would be a test of that low. Let me know in the comment section. I'll leave a pinned comment up there. Is it likely we get to that 63%? Of course, you must know my answer by now. I think it's weighing on a very slim hope and a prayer that the market gets to that point, because I'm sure there's a lot of people that will be buying at much higher prices, and even whales and all that sort of stuff that will be getting it there. The institutions, I don't think they're going to be trying to screw this thing down. It just seems like a real big, ridiculous pipe dream by the bears that missed out on those lows. All right, so let's do this one nice and quick. Now we're at 48K for that top there. So that's the monthly swing top. Very, very important price point for the market to break through. And this is, of course, if the market can just burst up and then it just doesn't, it's not able to hold those levels, and you can start to see some closes to the downside. That's what we may be looking at there. That's probably the best case for the bulls to the upside here. From a price point down to our single digit teens, well, 11-12% puts it above the 50% level, which is actually quite strong for the bulls if they can remain above the 50%. So you can see here, if I take it off linear, then yeah, that's going to keep it above that 42K level, and you get some closes. And if the market does then consolidate above here, has a better chance to move to the upside. Let's go down to 20%. Well, brings us back to the current prices. And we know from history that this has all been 20 to 22% moves. The February to March, the April to June, and the July to September periods were around 20 to 22%. So it's also possible. Going down to 30%, that brings us to 33, 34%, which is what we've seen in the past, about 31.5. So back to these previous highs. Also a possibility, yet still remaining relatively strong leading into the halving period, and then out the other side of the halving period, which we've talked about. That's where the market typically consolidates for another 3 to 6 months, call it, and then starts to break to the upside. So still in a strong position. 40% brings you back to these tops here at roughly 28,000. And then for the ultra bears that think the market could do this, 53%. Still brings you out above these levels here in March. 63% still back above the zone where the market broke out after the FTX collapse. So we've covered a lot of numbers here. What is the most likely scenario? Hopefully you can see what I think is the most likely scenario. I think we test the region here of low to mid 40s. That's why the halfway point's here. And then look for one of those corrections depending on how strong the market has moved up. If it's a nice gradual move and continues to absorb the supply on the way up, then maybe that correction to the downside isn't as severe as if it were a big sharp move to the upside and then you get that sort of severe move to the downside. Let's continue to follow up with this roadmap, which means hitting that like and subscribe button down below. Pinned comment will get you to the Black Friday sale, so join on that. And in terms of our food analogies yesterday, it seems like Bitcoin might be looking at the menu now for dessert as we continue to climb just that little bit higher here into the high 37,000s again. See you in the next video, guys. Have a good one. Peace out.